The broadcast is now starting. All attendees are in listen-only mode.
I'm Ernie Humphrey, the CEO and CEO of Treasury Careers. Thank you to everyone for taking the time to join us for our webinar today, our first global webinar, FP&A Transformation, Becoming Agile, Adaptive, and Predictive. We are honored to be partnering with FP&A Trends to deliver this webinar with you today. I'd also like to thank our sponsor, Centage, whose strong commitment to thought leadership helps us make this webinar possible today. For quite some time, CFOs and the finance community have been talking about transforming the finance function, becoming the better business partners, and focusing on value-add strategic activities. At the core of that transformation is FP&A, as activities like business planning, business unit strategy, investment allocation, and predictive analytics become important to fulfill finance's new expanded position within the company. But to do that, FP&A itself must transform and change from its traditional flux analysis and flash reports to be much more modern and a cutting-edge department within the company. When starting to embark on your own FP&A transformation journey, there are a couple of principles you need to keep in mind. Today, we will share insights from the International FP&A Board on FP&A Advanced Analytics and FP&A Analytics Maturity Model, and Thomas Lundell, Director of FP&A and Business Control at NetApp, will share his experiences on FP&A transformation. Before we get to our content, I'd like to offer a few quick words about Treasury Careers and a few housekeeping items. Treasury Jobs recently launched Treasury Careers. Treasury Careers offers content and resources that empower Treasury professionals to own their career success. We are the only place that posts only Treasury jobs. We offer Treasury certification resources, complimentary webinars like this one today, several resources around Treasury best practices, and stay tuned for even more. A new Treasury certification is on the way. A few housekeeping items. We will send you the links via email to the presentation and the recording within the next 24 hours. For those of you interested in CTP or FP&A credit, you need to answer all the polling questions and remain on the webinar for the duration of the webinars. If you have any questions on CTP or FP&A credit, please send an email to ernie@treasurycareers.com. We'd like to hear from you, so please ask your questions at any time in the questions area of your GoToWebinar control panel. We'll do our best to get to your questions at the Q&A session at the tail end of the webinar. If we don't get to your questions, we'll follow up with you afterwards and get your questions addressed. Finally, we appreciate your consideration in taking a short survey at the end of the webinar today, as we always strive to improve the ROI we offer our event attendees for their valuable time. A few quick notes on our agenda before I introduce our featured speakers. First, we're going to kick things off with Larissa Melnichuk. She's going to go over advanced analytics for FP&A, FP&A Analytics Maturity Model, the dynamic FP&A operating models, and then we're going to welcome Thomas Lundell. He's going to give us his great experience in driving FP&A transformation, and then we're going to close the webinar with Q&A and conclusions and additional resources. It is my distinct honor to welcome our two featured speakers to the webinar today. Larissa Melnichuk is the founder and managing director of FP&A Trends. FP&A Trends helps companies realize their innovative FP&A potential through training, consulting, professional networking, and debating. Larissa has over 17 years of experience in FP&A, having held senior FP&A positions at Emphasis, Ace Group, KeyBank, and HSBC before setting up and running the AFP FP&A Club in 2013 and driving its expansion into 7 countries in Europe and the Middle East. Thomas Lundell is a finance and operations leader with a strong drive to build, improve, and develop organizations and people. He has extensive experience in fast-paced environments with a solid track record in building international teams, developing analytical frameworks, anticipating and driving change, building partnerships with business executives, and delivering business results. With that, it's my distinct pleasure to hand the floor to Larissa. Larissa, the floor is yours. Please take it away.
Ernie, thank you so much. This is such a pleasure to start this global webinar. It's really global. Good morning, good afternoon, good evening, everyone. This is the call from Frankfurt. We have Thomas from Amsterdam, Ernie is from the US, so we are really looking at these global trends in financial planning and analytics. Before we start to talk about analytical transformation and advanced analytics for FP&A, I really would like to share with you the global trends, how financial planning and analysis changing around the globe. traveling the world and establishing FP&A boards in 11 cities and 10 countries, and then moving this to Australia in July. I met with a lot of CFOs and finance directors and directors of FP&A, and really what is happening now, we are moving from traditional view, from traditional seat of FP&A towards the new global world. So you can see that in terms of the planning, obviously, if previously there were scheduled plans, we are moving towards on-demand, continuous planning, and more companies managing to implement models that help them to do this. In terms of the models, if they still used to be static models, we are moving towards driver-based and dynamic, very quick models. Traditional world of FP&A, it always was extensive level of detail, very heavy, very extensive budgeting process. And this is something what really stays in the old world in the 20th century. It's all about simplification. It's all about the key drivers and simplicity and quick response to the detail. In terms of the systems, we had all these traditional systems of the 20th century, which were really on IT responsibility. In order for us to change anything, we had to ask IT to request this. We don't have time for this now, so it's moving towards more flexible new generation of systems with finance responsibility. Again, we still see a lot of Excel bridges, even for those companies that have systems. And this is happening because of the flexibility. We need this flexibility. But we're moving towards integrated planning platform. I would say that for FP&A, it's still a little bit ahead of time, this idea, but it's already happening. Analytics from historical analytics, we're moving towards advanced analytics, and this is I'm about to reveal to you the results of the discussion of International FP&A Board. In terms of the time horizon, we are moving away from accounting period towards expanding period. So just yesterday in London, we had our fourth London FP&A circle, and we were talking about rolling forecast. Interestingly enough, we do this research in every country around the globe. Not so many companies still have rolling forecasts, probably around 25–30%, and only maybe 40% of them really successful with this, but we are moving towards rolling forecast. In terms of data, a lot of talk about big data analytics for FP&A. Again, this is a little bit ahead of time, and obviously a lot of changes happening in the world of people. So if previously there were consolidators and typical traditional financial accountants, we are talking about strategic and influential FP&A people. So now this is the time for us to talk about advanced analytics for FP&A. We discussed this question in 11 cities and in 11 cities around the globe. We were talking about different definitions, and obviously there are different ideas and different definitions depending on company, depending on the experience of people. But we really like to look at this from the Gartner Analytics Maturity Model point of view. It really describes the sense of FP&A advanced analytics or proactive analytics, how we call it. So obviously, it's starting from descriptive stage, and this is where we are very good. This is the analytics of the 20th century. So with our traditional variance analysis, we spend a lot of time looking at the history. We're also quite good with diagnostic side analytics and FP&A. We use this and we explain the variances, sometimes not very efficiently, but we spend a lot of time there. But definitely FP&A advanced analytics, the analytics of the 21st century, it's starting from predictive and prescriptive. So this is the forward-looking, the analytics that answering the question, what is going to happen? How can we do in the future? We discussed this at London FP&A Board. We would say that probably prescriptive analytics, it's a little bit ahead of time for FP&A. It will happen, and it's already happening, and there are some prescriptive solutions and automations, but definitely we are quite good now at predictive stage. Driver-based models, those models that are based on key drivers, they give us very good perspectives in terms of what is going to happen. It's happening around the globe. We see interesting case studies. Just to give you an idea that, for example, Swiss Re company with the head office in Zurich, they are going to invest $500 million on advanced analytics in the next 10 years. And we see more and more interesting projects happening. I really would like to summarize the definition of advanced analytics with this quote from Thomas Davenport, who is analytics thought leader. I really like his books, and I think it's really a nice wording and explanation what it is. So advanced analytics, this is the extensive use of data, statistical and quantitative analysis, explanatory and predictive models, and fact-based management to drive decisions and actions. If you ask me about where FP&A at the moment in terms of advanced analytics, I would say that we are gradually going there, but there are still a lot of traditional methods. And unfortunately, around the globe, infrastructure of FP&A is probably a little bit out of date, and there are reasons for this. The investments into the systems happened probably 8-10 years ago, so they're already out of date. There were a lot of acquisitions. There are a lot of consistency problems. The traditional budgeting is still working there. It takes a lot of our resources. Sometimes for FP&A people, it's even very difficult to sit down and to think how they can change things. But this is definitely where we're moving now. So can we go to the next slide? So this is the conclusion of many international FP&A boards about the features of advanced analytics. So definitely it's proactive and forward-looking. It's agile. It allows us a flexible and very quick decision-making process. Very often it's real time, and this is when we place scenarios in the board of directors meeting. We don't go and change our PowerPoint. We don't have this time now. It's really multidimensional, and we started to talk about integrated FP&A. This is where 3 traditional planning processes are really harmonized. This is our strategic planning, this is our business planning, and operational planning. Obviously, advanced analytics enables key decision making, and it's happening not only in finance. We're talking about digitalization and connectivity, but I must say that a very interesting situation we had just recently in London in one of the conference where the director of digital transformation and finance of one very, very big company was talking about word recognition and voice recognition technologies, and definitely they're doing a lot of progress in their traditional accounting function, for accounts payable, for accounts receivable, for automatic recognition of contracts. But then somebody asked the question, what about FP&A? What do you use? And the global director of this big, very well-known company said, we are using Excel. So I think we have a lot of things to do in order to use advanced analytics and digital technologies in finance field. Obviously, predictive and prescriptive tools, they're already happening, and they will continue to happen. And obviously, minimum processing effort. We are talking about more value-adding activities in FP&A. Now, I would like to share with you if you click, yes, thank you. So this is the FP&A analytics maturity model that was developed at first by London FP&A board less than 1 year ago. Then we checked it in many different countries. We enhanced this with the ideas of different people. And this is the simple model that allows us to see where is the leading stage and what it requires. Obviously, this is the model, and it's different for company and industry and even country. And some companies can have different departments at different levels of their analytical development. But obviously, it gives us a very good structure of what is going on and where we would like to be. I don't want to go through each stage. I think it's enough to reveal to you the leading stage, something which is really ideal for FP&A department from analytical point of view. The first feature, this is integrated planning process. In London, we had discussion with Swiss Re company about integrated FP&A, where we are moving. It was interesting to see that the definition of integrated FP&A is different from the definition of integrated planning that you can see from corporate performance management leaders and vendors. For them, it's just drilling down. For them, this is just looking at different business units and then consolidating it. We agreed that for us, for FP&A integrated planning process, this is top-down and bottom-up processes, those harmonized processes that are done through the drivers and implemented through a good system. Ideally, it should be driven by drivers that are already generated through an analytical business intelligence systems. And I must say that we are still looking for very good case studies around the globe. It's happening step by step, and we will be there. But there are not many companies around the globe that have this fully integrated FP&A. If you know such companies, I would be quite interested to hear about these case studies. We are talking about leading analytical matrices, and what it means, this is leading analytical drivers. This is your key drivers, 20% of your drivers probably that generate 80% of your results. This is the predictive model. The model can drive the future. This is integrated driver-based planning model that also implemented through the system and connected with your analytics. So very often we see analytical projects, they live in different departments and very often not so much connected with FP&A, and this is something what should be connected at this leading stage. Also, we are talking about real-time collaboration and planning, and this is the decision of what balance you would like to have, who is the key driver, or who is the key participant at this process. And again, with the modern systems, it's possible to drive quite a good and quite effective collaborative process. We are talking about easy multi-dimensional scenario planning. So scenario planning, it should be simple, it should be real time, it should be in the board of directors meetings, or it should be in your business unit level when it's needed. And also, obviously, advanced analytics, analytics that we already discussed. So obviously, when we have this infrastructure, we are able to deliver this advanced analytical projects. My understanding is that now we have this polling question. It would be interesting to see what stage of analytical development, of analytical maturity you are. So if you can quickly just fill this form, then we will reveal the results with you, and I will let you know what we see around the globe as well. So while we're still doing this, yes, please.
Oh, great. Thank you very much, Larissa. Just to jump in here, sorry. As you can see, we've gone ahead and launched the polling question. Just want to give those of you on the webinar a reminder. We appreciate everyone's consideration in answering the polling question. If you're interested in continuing education credits, need you to answer the polling question. So we'll go ahead and leave the polling question up for another 10 or 15 seconds or so. Then we'll go ahead and share those results with everyone, and then we'll get Larissa's take on it, how this is comparing to what she's seeing across the globe. And this will help us level set the rest of our conversation based on where the audience is in terms of the demographics there. So I'm going to go ahead and close that polling question, and I'm going to go ahead and share the results. So Larissa, what are your thoughts? It looks like we've got about 71% in basic and developing, 25% in defined, and then 13% in advanced or leading. What are your initial thoughts on that?
I would say that it's very consistent with what we see around the globe. Definitely, even international big companies, they are in between of developing and defined stage. I would say that very often in big corporations, you will see countries or business units that are at the different stages of maturity, and it's normal as well. What is interesting that I would say that younger companies and smaller companies, they're managing to realize analytical potential, and we see more of them at the advanced stages. I would be definitely interested to talk to those who are leading at the moment. So if you can get in touch with me, I really would like to hear your case study. I must say, I would like to add here some of the examples. Sometimes the movement from one analytical stage to another, it happens through system implementation or through restructure. For example, Etihad Airways, they moved to the advanced level after they introduced the modern, very agile system, FP&A system. And there are many other examples like this. So before, I would like to introduce the next speaker. This is our FP&A board member from Amsterdam, Thomas Landel, who is Director of FP&A and Business Control at EMEA at NetApp. Thomas, we had two wonderful FP&A boards in Netherlands and Belgium, where we looked at analytics model, not only from the point of view of analytical transformation, but what we agreed that it's not enough to have all these systems and processes in place, but definitely it depends on culture, it depends on people, and it depends on many other factors as well. So please welcome Thomas Landel to talk about FP&A analytical transformation, his experience with his company and with other companies as well.
Yeah, thank you very much, Larissa. Thank you for that introduction and handover. So as Larissa said, my name is Thomas Landel. I am the Director of FP&A at NetApp in the EMEA business unit, so not globally, but in the EMEA business unit. I'm going to talk to you here about my professional experience, some of the research I've done, what I picked up through networking events and the FP&A board, as Larissa mentioned, and my personal opinions here. So I want to mention that what I speak about today are not necessarily the opinions of my current or any of my past employers, just to get that across. So my background is relatively international. I'm from Sweden, but I spent a number of years in Belgium. I spent a number of years in the US and I have an MBA from the University of Montana, Missoula, Montana. It's a great time spent there. And currently live in the Netherlands since about 12 years. I have worked in large multinationals, and I think that was one of the reasons I left Missoula, Montana, is that I had a very interest in working for large multinationals, and there aren't that many there. And after that, I moved to Belgium. So I have a background in very different industries, fast-moving consumer goods, consumer durables, and most recently Silicon Valley IT. So that background will help you to understand a little bit where I'm coming from, and might explain some of the opinions that I have. That I have a very diverse background from both a country, from a cultural, from a company size perspective. So today, the first thing I'd like to talk about is the various operating models. So, and talk about dynamic operating models, because I really believe that there isn't really one size fits all optimal FP&A operating model or FP&A department that all companies should implement right now. And one of the principles that I really like from my student time as well is this quote from James Clark from 1923. I didn't go to school in 1923, but the quote is from then. So different costs for different purposes. So if you know a little bit of management or cost accounting history, you may be familiar with that. So basically what he's saying is that the cost isn't the cost. I mean, this is maybe finance stuff. You don't want to talk about this when you're going to your barbecue or cocktail parties, but it is quite fascinating to finance people that costs aren't cost. It really depends on the purpose, right? If you're preparing financial statements using GAAP, or if you're trying to do some contracting with government agencies, or if you're doing, exit strategies or pricing or product mix decision, you don't define costs in the same way in all of those scenarios. And it's the same thing with FP&A. I think there isn't one type of FP&A department that everybody should be using all the time. It really depends on where you are on this business lifecycle curve, for instance. So where are you on the growth curve? What does the market maturity look like in your business? What's the business complexity, and what technological capabilities do you have? So I think the first step you need to do is to make a proper assessment then and decide on the model that's right for your specific company. So let's have a look on the 4 bullet points that I just mentioned in a little bit more detail. So the first thing you need to do or can have a look at is probably to see whether you want to work in a centralized or decentralized way. What fits your company the best? So if you're a fast-growing company, you need to have quick decisions. You need to move fast. You need to capture market share. So likely a decentralized model will enable you to make most of those decisions very fast and move very fast in the market. Slower growing companies, slower growing markets, there is probably more relevant to try to optimize profitability. Investment allocation probably becomes more sophisticated, so you're likely to be a little bit more centralized. And if you're looking at your market maturity, perhaps that's a little bit related to the growth curve. If it's low, it's probably decentralized. If you're high market maturity, you can do more out of corporate headquarters. Maybe you can even offshore things. And the level of business complexity also has an impact. The more complexity in the business, the more local you probably need to be. You need to have a distributed FP&A organization to plan and manage. If you have low business complexity in your business, simpler business model, fewer products, maybe only a few products even, you can run more things centrally. Same thing with technological capabilities. If you're very low technological capabilities, you probably need to be centralized. If you have high technological capabilities, you can work collaboratively across regions using online financial planning systems, and that allows for a much more decentralized and collaborative approach. So on the next slide, one back, please, Arnie, sorry. Thank you. So going back to this dynamic model again. So now you picked where you are right now, but you got to be aware that that's not a static position you're in. Certainly, your company might experience different growth rates over the business life cycle. The market maturity might become higher. The business complexity will change, and hopefully your technological capabilities will move in the right direction. And that means that the operating model you choose is not static. It will change over time, and you need to make sure that you are changing your FP&A operating model with that dynamic. Next slide, please. Right, so as you go on your FP&A analytical transformation, one of the things that I like to do is to compartmentalize certain things and to get the structure of things. So one step to do is to evaluate the current position for finance in your function. And I like to just divide it into three buckets, as you see in front of yourself here. One is the financial controller bucket. So that's let's say the traditional finance, accounts payable, receivable, accounting operations, payroll, staff, and SOX controls and whatnot. Then in the center, I put tax, treasury, revenue enablement, revenue accounting, finance systems, M&A, internal audit, risk management, investor relations. Those to me are more specialty services, probably run out of a corporate function and not necessarily so distributed into the field. And then on the right-hand side is field finance FP&A. Now, field finance is maybe not a term that everybody uses, but I think it's sometimes used in the Silicon Valley type of companies. And that's where it's more consulting experience or business planning. You do predictive analytics, business unit strategy, investment allocation, P&L analytics, performance monitoring, and deal economics. If you're in field finance, perhaps not so much in FP&A, but certainly in field finance, deal economics, forecasting, and budgeting. So once we've done that sort of separation and we kind of understood what the overall finance department is, we can then move on and see what these field finance and FP&A guys should be doing. So Larissa showed earlier the model from the London FP&A board. So I looked at that and looked at other models, and I kind of built my own model. I'm quite stubborn and like that. And I tried to evaluate how you can make a matrix out of FP&A operating models. You talk about input and output. You can talk about traditional, modernized, and cutting edge. So I just want to go through these really quickly. So on the input side, I broke it up into people, process, and technology. Traditional, on people, maybe that's CPA and Big Four type of people that you have in your FP&A department. If you modernized a little bit, you put in an MBA there, perhaps, like myself. And if you're really cutting edge, you added also data scientists, like Larissa talked about, predictive analytics and so forth, becoming more and more big data oriented with data scientists also in the FP&A departments. From a process perspective, the traditional, and maybe this is more European than US centric because of the legal entity focus in different countries. Traditionally here in Europe, we had legal entity focus with central consolidation of the various country entities. In a modernized version, you might be more business unit focused, aligned with central schedules and guidelines. And if you're really cutting edge, you're company-wide integrated and you work in a collaborative way. From a technology perspective, traditionally we still probably do work with forms and spreadsheets and macros. If you modernize a little bit, you move to a common financial planning system, you link that to ERP with batch updates overnight or a couple of times a day, whatnot. And really cutting edge is, of course, if you integrated collaborative real-time planning systems. So if you enter a forecast update that automatically refreshes real-time across the globe for your company, for your systems. Now, those are the inputs. Then there's the outputs as well. So traditional, on the analytics side, traditionally, finance still has to do to some extent flux analysis, flash reports, price volume mix, very traditional activities. Modernized, you probably moved into more business analytics and business intelligence systems. And if you're really cutting edge, you're starting to do predictive and prescriptive analytics. You have real-time KPI dashboards where you monitor all the revenue coming in or the bookings coming in and your pipeline and whatnot. And FP&A certainly is involved in that as well. On the business partnering side, the traditional approach would be to plan your responsibilities, would be to plan, monitor, report on revenue and expenses. You modernize it a little bit, you're probably talking quantitative analytical support to decision making. And if you're cutting edge, you really start working more on business plans, business unit strategy, investment allocations, and things like that. So in step 1 and 2, I kind of built the dream scenarios. Very simple. You pick where you are on those, or where you want to be on the FP&A operating model side. But one of the things that's sometimes a bit difficult is the separation between accounting and FP&A. And I think that there is probably a need to really separate the two. That means you need some changes to the overall finance department to be able to move FP&A where you want it, but hopefully that should not be a showstopper for you guys. So this is really hard also though, because this impacts people's jobs and how they do things, and it doesn't mean that you mean that you don't need to do anything about accounting when you're FP&A. That's not what I'm trying to say by this. It just means that probably FP&A should not be doing accruals or account reconciliation and activities like that, because it distracts them from doing the more value-add activities that they should be doing. So it's really hard on giving up on responsibility, but co-responsible for accounting activities will keep you from delivering more value-add services to your business partners. So now then you go through this change. I think it's also important that you paint a picture of the future where you want to be, and not exactly. And there are some things that are keeping you from making these changes as well. So the most important barrier to improving FP&A's value to the business is that we tend to be buried in basic duties. I mean, that's what I talked about earlier. That may be forecasting input, it may be accounting activities, it may be other activities, but there's just not enough time to make that move. So we have to get around this somehow, and we have to remove this barrier. And I think the best way to remove it is to approach that in a structured way. So on the next slide, we'll talk about the different phases of how you can do that. So the first thing is you need to standardize, and you probably need to outsource some of the things. Depends on the size of the company and then what your location is and whatnot, but you probably need to do that. And as I say, as you go through these phases and you talk to your teams about all these changes that are going to impact the jobs that they are doing, you really want to make sure that you paint that picture of phase 5, the end state, or temporary end state, if you will, so that they see where you're taking them. Because you're taking them from doing all these transactional activities to more strategic value add around business planning and strategy and so forth. If you don't show them that as well, they're just going to feel that you're taking away a job from them and they don't know what you're doing. So phase 2, you probably want to centralize some things. So I mean, earlier I showed this model where you centralize and you decentralize, but but as your company matures and your growth stabilizes a bit, you probably need to think about centralizing some activities and simplify. Look at what you're forecasting and reporting on, and is that all of that really necessary? Are there some things that you can stop? So actually, I interviewed a candidate once from a Korean conglomerate. So he was very frustrated that management made him work extraordinary long hours, and I mean Korean long hours, producing reports that nobody really looked at. So he proposed then to his management that he could stop those reports and spend his time on other things or go home. But management turned his proposal down because those reports, quote unquote, had to be made. So with that mindset, you certainly won't be able to go through this type of transformation. You need to be able to free up resources. You need to stop doing some things in order to be able to undertake these transformational activities. 3, also automate as much as possible. Business intelligence systems are brilliant today. I mean, I worked in FP&A about 15 years ago as well, and I mean, it's a big difference to what's available today. And it doesn't have to be fancy scatter charts that nobody understands anyway. It's just that the automation of producing a P&L with BI capabilities is fantastic, and the productivity enhancements are great when you do that. So in phase 4, you might want to think about things like rolling forecasts. You might want to offshore some things that if you're in that sort of cost pressure type of phase, that you can do that. And you can even go as far as thinking about your operational input on your forecast. Does your operational input to forecasting tool really have to be done locally? I mean, it may, many may not, but it's probably something you want to ask yourself. So then, once you've gone through that, then you're into phase 5, and now you're really getting to the value add stuff, which I personally happen to also think is the cool and fun stuff as well. So that's very good. On the next slide, it's a bit of a repeat from Larissa's slide with the Gartner model. So here is where you want to develop prescriptive analytics and business planning capabilities. So prescriptive analytics to me is very linked to business planning. So predictive analytics is basically using statistics, right, to predict the future based on leading indicators. So you might have, if you're really a big conglomerate, you might look at things like currencies or commodity prices or GDP or whatnot to try to predict what my revenue is going to be over the next 6 to 12 months. But I like that because it gives an idea, but you have to combine that with maybe a bottoms-up view as well, because otherwise it becomes a little bit fatalistic because those are the leading indicators and they tell us that the outcome or the revenue will be this, so there's not much we can do about it. With prescriptive analytics, on the other hand, I think that you also incorporate plans and actions, and they're much more proactive and active. And it can be really used effectively in business planning and investment allocation situations. So they will suggest a decision option on how to take advantage of a future opportunity or mitigate future risk, and they'll show the implication of each of those decisions. And then you can continue to take in new data, and you can repredict and represcribe and automatically improving the prediction accuracy and prescribing better decision options. It's like a dynamic and live business plan, if you will, but with numbers. So on the next slide, we're back to my model again. So I think that you can use this as a visual framework to start working on your own transformations. You need to decide if you agree with it or if you want to tweak it a little bit, and may not be fully applicable to what you're doing right now. And then you decide on where you are right now, where you want to be, and what you need to do to get there for your specific organization. And the last thing I want to say before I hand over to Ernie soon again is that the thing with this is also that it's not a finite game, if you will. It's an infinite game. You will find an operating model, your target operating model, but business is dynamic. Things happen so fast. Your markets will be different in 3 years when you will implement this change. So you're going to go on another transformation journey again. So this is definitely an infinite game. There is no, it doesn't end after 3 periods or 90 minutes or whatever. You need to continue to work on improving and modernizing your FP&A department. So Ernie, I think you have a polling question.
Great. Thank you very much, Thomas, for your fantastic insights. So we're going to go ahead and benchmark with you, our audience. So we're hoping you'll share with us what your biggest obstacle is relative to driving FP&A transformation at your company. So I'll go ahead and leave the polling question up for 30 seconds or so, and then we'll go ahead and get some color from Thomas, and I'd like him to tell us in terms of maybe the biggest barrier that he's overcome. Has that been people, process, and technology, and how has he been able to overcome that? And then once we get Thomas's color, we'll let Thomas give us a couple of closing points to really put a fine point on his part of our presentation today. Then we'll go ahead and transition into our Q&A session. And I want to remind you, we can take your questions in the questions area and you go to our control panel. This is absolutely a fantastic opportunity to tap the expertise of two world-renowned FP&A experts, and I don't say that lightly. I've been in the FP&A game a while now myself, and I couldn't have picked two better experts to be in this webinar today, so please take advantage of this opportunity. So I'm going to go ahead and close the polling question. I'm going to share that, and then I'm going to get a little color from Thomas. And I guess I was putting together the answers, and I put E. Each is a meaningful obstacle, and I got 34%. I'm kind of glad to see that. So Thomas, we've got 5% people, 20% process, 27% technology. So we're really concentrated on technology and all of them. So what's your take on those initial results?
It surprises me a little bit that people is so low. My experience is a little bit that people, it can be an obstacle in this because you need a different mindset if you're working in a more accounting type operations than if you need to be more proactive, almost business consultant when you're in FP&A. So I'm a little bit surprised that that's very low, but that's fine. Technology, I think, is almost a given. I know that a lot of people are going to say this, and even I think that the company I work for right now actually have very good systems. But that doesn't mean that the employees complain and they would like to have simpler and better things. But if when I interview people for positions and whatnot, then I try to understand what the companies that they come from, what type of technology they have, and I always feel that there's such a broad range of technological capabilities in different companies, and then sometimes you don't appreciate what you have. And certainly, in any situation, you can improve a lot. And like Larissa said in the beginning, we all love to work with Excel. I actually love to work with Excel. I think it's a brilliant tool, but there are other tools out there right now that allow for more collaboration and more integrated planning and the new business intelligence systems.
Great, Thomas. Just a little more color, and I agree with your comment about people. So can you share with us, I guess I'm jumping the Q&A, but I want to ask you this question now because it's come in. Can you share with us how you've been able to build consensus across departments and get people on board with some of these shifts that you've had to make in responsibilities and scope?
Right. So that has always been an interesting thing, right? Particularly when it comes to changing scopes of responsibilities, because that impacts people's day-to-day jobs and their livelihood, if not or whatnot. So there, I really think that in order to have this buy-in, you have to create the proper network within the company as soon as you join it, or if you've already joined it, start working on it right now, and make sure that you network with people outside finance if it involves departments outside of finance. Make sure that you understand where they're coming from. And I certainly have a background that's quite broad prior to joining FP&A here most recently. So to understand where they're coming from, and in moving your own team, I think it's really important, as I said earlier, to make sure that you paint the picture of the future state and get their buy-in to changing this framework. I mean, then if you're going to shift over responsibility to other functions because you want to free up this time, you're going to stop doing some things, you're going to shift responsibility to other functions maybe. Usually, other functions are quite happy to take on that additional workload if they get the additional resources with it, of course. And there you have to have a continuous discussion with them and understand and defining, write statements of works even maybe of what exactly that you are going to transform, but also for them paint a picture of that life actually for them also will be better. They will get enhanced responsibility. they will be able to have a better say. They will, have a bigger kingdom, if you will, and a bigger scope of responsibility.
No, I completely agree. So when I talk to CFOs across the U.S., quite often, I always talk to them about gaps in people, process, and technology, but I always try to get them to focus on people first, because if you have inherent barriers in people, you're not going to get very far. So to have that skill set that you need, set the right environment, get that accountability, then the slope of that hill you have to climb seems to go down quite a bit. So Thomas, can you please just give us a few key takeaways from your presentation, and then we'll transition into the Q&A.
Right. So the first one is this different costs for different purposes, dynamic organization. One size doesn't fit all. I really don't believe that one size fits all, and that all companies should do the same thing and be organized in the same way in their FP&A departments or any department, really. The other thing is that business is dynamic. It's a continuous journey. It's an infinite game. It doesn't end after 90 minutes, as we would say in Europe, probably after 4 quarters in America. And the third is that I really like this idea to paint a picture of the future and use a structured approach to drive this change. That this change is not a bad thing. Change is a good thing. But in order to be able to convey that message properly, you need to paint the future vision of the future state and get everybody on board.
Great. Thank you very much, Thomas, for that fantastic content and your perspective. So I'm going to go ahead and offer some overarching conclusions and recommendations for us. And I'm going to go ahead and open up the Q&A session. So just before I hit the conclusions and recommendations and key takeaways, again, I want to let you know that we can take your questions in the questions area. Go to a webinar control panel. So, and recommendations, of course, these are coming from Larissa's tremendous experiences, Thomas's extensive experiences, and my own extensive experience in having conversations with thousands of CFOs in moderating CFO roundtables across the U.S. for the past 5 or 6 years. So, FP&A analytics are essential for business agility, which is just critical in today's world. So we need the analytics, the drivers. We need to incent behaviors that impact drivers of company value, and we have to be able to react in real time. We need that visibility in real time. So the key to anything is getting that visibility. So we got to get that visibility across the enterprise. We got to figure out what matters, not make it too complicated. And at the end of the day, where I think I see FP&A going is if you look at what really impacts value, it is the thing that's most important is maximizing the value to our customers and then incenting the employee behaviors that maximize the value to the customers. And if we can get it down to that, then our FP&A functions are going to offer tremendous value. So you do great to assess where you are, right? We talked about the framework 1, 2, 3, 4, 5. Be honest. Where are you? Where do you want to be? So where is it that's going to offer you the most value? So if you're going up from 1 to 2, 2 to 3, 3 to 4, you're going to have to define the ROI to that, right? You're going to have to look at people, process, technology. What do I need to invest? What barriers do I need to remove? So what do I need to get there? What's the ROI? And then you have to get creative in acquiring the resources you need. As we've already talked about, the technology is fantastic now, the cloud-based systems, it's cost-effective, but I think an even greater resource is your peers, these FP&A professionals across the globe. Larissa has done a fantastic job at connecting FP&A professionals across the world. You can go on LinkedIn. You can connect with these people. So it's a barrier for you. There's someone out there that's done what you want to do. So it just takes some ingenuity on your part to connect with these folks. And I know myself and Larissa are happy to help you make those connections. And you need to be able to look forward, but that's in addition to looking backwards. So we need to teach ourselves how to look backwards, predictive, prescriptive. Don't be afraid of those words. It's not as complicated as you might think. What you want to get to is a data-driven, forward-looking decision-making, and that's what drives your competitive advantage. Look forward, business agility, and in order to achieve the leading stage, you need not only digital technologies, you need people, process, technology, and you need to be able to invest in your people. That's your most important asset, and I'm glad to see especially companies in the U.S. and across the globe, I hope also, are investing in people because that's really our most important asset. So with that, I'm going to go ahead and open the floor for Q&A so we can still take your questions. So I'm going to go ahead and ask my first question to Larissa and bring you back in here. So, Larissa, from your travels, from all your conversations, what do you see is the biggest barrier to people in getting to where they want to be in terms of their FP&A transformation? Is that people, process, technology, environment? What do you see?
Thank you so much for this interesting question, Nelly. Obviously, this is the combination of things, but probably the biggest one is culture. I would say that the business culture or a traditional budgeting culture, this is the biggest barrier to analytical transformation. It doesn't matter whether you implemented the system and hired the best analytical talent in the world, but if your traditional culture is such that you mix targets and forecast, you look at this as a measurement but not the management to your planning process, then it always will have this political games, it always will be very inefficient, not so analytical process. So my answer is that the culture, this is the biggest barrier, but obviously following with such things as investments, definitely the big trend at the moment for finance departments to reduce the cost, and we are talking about such ratio as a cost of finance department as a percentage of revenue. And they know that many companies are very proud that at the moment they have less than 1%. But the reality is, yes, it's possible to reduce the cost of the total finance department, but let's invest into financial planning and analytics. Let's invest into the people, system, processes, because what we have at the moment in many companies, it's still 20th century systems and processes that we're trying to use to operate in this incredible world where we are. So this is my answer. Thank you.
Oh, thank you very much, Larissa. Fantastic. Thomas, I've got a couple technology-related questions to you, so I'm trying to consolidate 3 or 4 questions here, and we'll get back with folks to their specific questions, but I like a few of these questions, and I think they hit the theme of some other questions that we had. Thomas, in your perspective, what have you seen as the most important advances in business systems in the past few years? What have been the features that you've seen that have really helped you unlock that strategic value of FP&A?
Right. So that's a good question. I'm not really a big fan of really sophisticated visual BI solutions, like I mentioned earlier, but with complicated scatter charts, and that maybe because I'm usually present to management and board and that level, and then when you do that, it gets very difficult to digest that type of information. That's more for analysts themselves, perhaps. So I really think for me to do my job properly, I think the most important advances are really in enterprise data warehouses, where you have defined processes, common definitions, self-service capabilities, and then those have been the best advances in the last few years. So analysts can't really work without Excel. I mean, that's true. So also tools that integrate very well with Excel and PowerPoint have an advantage. If you have a direct link from your PowerPoint to your BI system, and then you can update on the fly when you're in a meeting, I think that's brilliant. And for KPI reporting, perhaps, I really like push reporting. So getting something pushed in an email or perhaps mobile is a great advantage. Management, my experience as a management, don't really want to log into a system and wait for some chart to load or a dashboard to refresh. They want information to be pushed to them so they can just open that report and quickly understand the numbers. So in terms of mobile and push reporting capabilities, I think those are really also important advantages in business systems that have happened in the past few years.
Okay, thank you very much, Thomas. I'm going to ask you one more question, and more on Larissa, I'm going to ask her a very similar question in what she's seeing. So this might not be an easy question, but I love to ask these questions. Thomas, if you had one wish of functionality in any area of any system, can you give us a flavor of what that might be? What is it that you'd really like to be able to do that this technology would really move the needle for you?
And that is in more integrated, almost balanced scorecard type of reporting, also for FP&A. So FP&A has this central function, right, where we manage the KPIs, the metrics, the performance monitoring, and everything for the company. And I really like balanced scorecard, but that is something that I I lack right now, at least in the system that I've seen, to be able to integrate that properly with data, not only from finance, but from HR and from other functions, from your training capabilities and customer service, employee service, into one integrated scorecard. That doesn't take a month to compile, but really is automated and at the fingertips of management.
Okay, fantastic. Larissa, I'm going to ask you, so when you're speaking to people across the world about technology, I'm sure they have a complaint, I'd like to see this, I wish I could do this, and you might be able to tell them that's already out there, but are there one or two things that you see that people are really yearning for that there might not be out there yet, but it might be out there and they just don't know it's there yet? So what are those one or two key features that you think people are most after in the markets today?
Obviously, this is flexibility and speed of the decision-making process, and obviously planning and forecasting process. So people are looking for flexibility, for flexible tools, and I would say that there are some disappointments with the traditional systems that they were implemented, and probably they're not so flexible enough. So they're looking for those tools and also ability to change them quickly, easily, and those tools are available now, obviously. So this is the biggest one.
Okay, thank you very much. So I'm going to go ahead and ask you both the same question. I'm going to go back. I'll stay with you, Larissa, for this question. So I've had a few questions, and I had the same question myself. So if we're looking at the ROI to investing in FP&A transformation, can you give us a few components of the ROI in making the business case that you think people might miss? And is the ROI dependent on company size, or is it more about the complexity of the business?
So Thomas, do you want to be first?
I can try. I think that, it's a very good question. I think that is also, the ROI is perhaps in the sense that we're be able to make data-driven decisions. So instead of making, let's say, gut feeling investment decisions, we're able to do more data-driven decision making. I think that's also where the value of FP&A is. And what FP&A is, we're able to quantify those gut feeling decisions even, and do some scenario analysis on it. So I think that if we're able to show that we're able to change decision making, change investment decisions, or help support investment decision, or optimize investment allocation, that we should be able to show a very good ROI.
Yeah. So what about? And I've seen this as well. Just kind of adding color here. So I think another place is where you can improve cash forecasting. You can improve deployment of resources, and some things that I think people might miss. I don't think you would have missed this, Thomas, but just the savings and automation and getting these systems to communicate to each other, getting people more focused on strategic activities. So instead of manually keying, now that I have this much time to spend, I can get like a full FTE. So can you speak to what you've been able to do not just headcount, but in terms of the benefits to you and better deployment of folks? Have you been able to get people focused on more strategic activities, or can you quantify those benefits, or how would you communicate that to your board?
So we are able to quantify those benefits because we are able to count the number of FTEs that we have been able to reallocate to other departments if they were now in accounting departments, or save altogether. And so certainly we've been able to show those kind of savings to the board and to our corporate.
Okay, great. So I'm going to ask one more question to both of you, and then I'm going to launch a final polling question as I ask. Larissa, I've got a few questions here around this line. So someone they're just getting started, they're FP&A, they're new to their job. So how do I get started? So I'm kind of at square one, I'm overwhelmed. We've given these people a lot of information. So what would you say is a good first step or first two steps for people that want to get their arms around where they're at and where they need to be?
First of all, just understand the business model. Understand the key drivers. Try not to look at the accounting structures and the traditional way, but just go around and ask the key questions. what are the key drivers in each department, in each business unit, what are the strategic drivers for the model, and try to complete this model. If you're lucky and this model already exists, then it's a good idea to look at how this model is integrated, how this model is harmonized with different planning processes. For example, how your different cost centers operate, what drivers do they use? Do they still use this traditional method of treating budget as an allocation to them, as an allowance that they have to spend? Try to explain to people, try to explain to them that actually there are key drivers and everybody will benefit from flexible budgeting process. Obviously, look at your current systems and the way the quality of data. I would say that probably the quality of data is the key. And build your FP&A team. Make sure that you have data analysts, that you have the model build, the architect, and that you have also business partner as well. So I would say this is probably the first steps you have to do.
Okay, great. Thank you very much. With that, sorry, Thomas, I'm going to have to go ahead and close the Q&A to be mindful of our time. I want to make a few closing comments. In the presentation, which you can download now, I'll be sending to you, I want to point you to some additional resources. So one of the big takeaways that I want from this is for you to take an action, whether that's reaching out to someone, reaching out to Thomas, reaching out to Larissa, reaching out to your colleagues. We want you to take an action, and that's really the best value that we can offer. These resources are fantastic. Some of them we talked about, London FP&A Analytics Maturity Model, some great articles on Larissa's website, and just some more articles that I've written as well. So please take a look at those additional resources. Again, I'd like to thank our speakers, Larissa and Thomas, for your great insights. Fantastic. So thank you both very much. And our webinar sponsor, Senate, we appreciate and share that commitment to thought leadership. They have some great resources on their website as well. And finally, a big thank you to you, the audience, for your valuable time. So thank you very much, everyone, for your valuable time, and make the rest of your day great. Thank you.